Greetings from 3Edge Asset Management. I'm Fritz Foltz, Managing Partner and Chief Investment Strategist at 3Edge.
And I'm Eric Beagleisen, Deputy Chief Investment Officer and Managing Director of Research.
On behalf of Eric and everyone here at 3Edge Asset Management, we're excited to be able to offer our investment solutions through the Cambridge Investment Research Platform. Our goal today is to provide a summary overview of our firm, our unique value proposition, and some examples of how we currently make our investment solutions available to registered investment advisors and their clients. So let's get started with a quick introduction to 3Edge Asset Management. 3Edge was founded in 2016, and we currently manage over $1.3 billion in assets under management and an additional $125 million in assets under advisement through model delivery. We serve a wide array of clients, including RIA firms, individuals, single and multifamily offices, as well as institutional investors and retirement plans. In 2020, 3Edge was named to the Financial Times top RIA list. In terms of Cambridge's CAP program, 3Edge is classified under the category of active opportunistic investment strategists. And this makes sense since we are an active tactical investment firm, operating within wide asset class ranges and making adjustments to our investment strategies as our market outlook changes. We create broadly diversified portfolios of index ETFs invested across a wide variety of asset classes, including stocks, bonds, and real assets. We're also global investors, and we invest across geographies. We'll make investments in the US, Europe, Asia, and the emerging markets, depending on where we find the best investment opportunities.
So what makes us different? There are a set of key features that we want to highlight here and the associated benefits that clients receive. First and foremost is that a key feature of our approach seeks to minimize severe downside outcomes. That is, we expressly seek to minimize the worst case portfolio drawdowns or the worst peak to trough declines that portfolios experience. Conventional theories such as modern portfolio theory vastly underestimate risk in our opinion in general, but in particular, both the severity and the frequency of these worst case drawdowns. So how do we accomplish this downside protection for our clients? This brings us to the second key feature. Our approach is quantitatively driven. Over a period of many decades, as students of the markets, we've constructed a model of the global capital markets and tested it over the widest variety of economic and market conditions. This provides our clients with investment solutions that are disciplined, unemotional, and allow for repeatability, as our model has been trained over such a long time period and across many geographies. And third, we implement our investment solutions utilizing ETFs or exchange-traded funds. This allows clients to gain access to a wide variety of global asset classes. Clients benefit from ETFs as they provide low cost, transparent, tax efficient, and diversified exposure, all while being highly liquid. Now, more specifically to our model, this is truly a differentiated approach compared to other quantitative approaches. It provides a disciplined approach that has been tested against the widest variety of economic and market conditions. The three edges of our model starts out with a long-term perspective using a valuation approach we derived that is based upon an earnings discount model that blends both current and expected rates for the cost of capital as well as growth expectations. This gets blended with the second edge of our model, global macroeconomic factors. These factors look at such things as changes in interest rates, yield curve measures, various credit spread measures to assess the medium-term outlook for the asset classes that we model. And finally, despite having this blended outlook from the long-term valuation and medium-term economic factors, which we believe provides a reasonable outlook as to where an asset class should be valued, as many have likely experienced, investors may act with a herd mentality from time to time, either in a positive, virtuous manner or in a negative, vicious manner, driving prices to extremes in the shorter term. We therefore introduced investor behavioral factors to help identify these shorter-term investor psychology-driven market moves, which ultimately provides the blend of the long, medium, and shorter-term edges of our investment process.
Great, thanks, Eric. Now let's take a quick look at some examples of how advisors utilize our 3Edge investment solutions on behalf of their clients. For example, the 3Edge strategies can serve as an excellent complement to more traditional 60-40 stock bond blends. By adding 3Edge investment solutions to a more traditional mix as a diversifying strategy, advisors are able to better manage investment risk while still seeking to be additive to returns. 3Edge is also an excellent fit for those clients who are interested in an active, tactical portfolio management approach, since, as I said earlier, we operate with wide minimum maximum asset class ranges, and we make changes to our strategies when our market outlook changes. In addition, 3Edge strategies can also be an excellent fit for those clients who may be more risk averse. For example, clients at or near retirement who seek investment solutions that can generate attractive returns, but are also able to manage downside risk and minimize portfolio drawdowns. Lastly, we all know that many clients today are interested in the rapidly growing area of ESG and socially responsible investing. And 3Edge offers a tactical approach to ESG investing through our 3Edge ESG strategy.
So solutions available to advisors and their clients on the Cambridge Investment Research platform include our conservative strategy, which is ideal for clients with a minimum holding period of 1 to 3 years. We find many advisors and their clients utilize this strategy as an outright bond replacement, particularly given the challenges from fixed income solutions with rates as low as they are today. Our total return solution moves slightly up the risk curve and is ideal for clients with a minimum holding period of at least 3 years. Often we find advisors and their clients who have a 60-40 type solution borrowing a bit from the equity and bond portions to create a new wedge for our total return solution. When combined with a traditional 60-40 approach, this strategy aims to reduce overall portfolio volatility, reduce portfolio drawdowns, and enhance returns. And finally, our ESG strategy has similar risk profile as the total return strategy, with a similar holding period and use case for clients. In this solution, the same model output as the total return solution is used, but the ticker selection process is tailored to select ETFs with an emphasis on raising the E, the S, and the G relative to the strategy's benchmark, while also improving its carbon footprint as well. This solution is ideal for advisors and their clients looking for an active opportunistic solution, like the total return solution, but who also have a personal drive to express their investments through an ESG lens.
Great, thanks, Eric. Now let's take a look at the way that 3Edge communicates with our advisor clients. At 3Edge, we have developed a robust multimedia communications platform because we believe that now more than ever, it is essential for investment managers to keep their advisors and their clients connected in real time. An excellent example of the value-added 3Edge communication platform is the 3Edge Portfolio Adjustment Memo, which we send out on the same day whenever we make any changes to our 3Edge strategies, keeping you and your clients informed as we make changes to our portfolios. In March of 2020, in response to the outbreak of the coronavirus pandemic, we launched our weekly 3Edge Week in Review videos. These videos are delivered each Saturday morning, and they feature Steve Cucchiaro, Chief Investment Officer here at 3Edge. The videos provide a market update as well as a deeper dive into a particular topic of interest. We also produce a monthly View from the Edge report, which outlines our most recent market outlook and any changes to our outlook. Lastly, we also provide in-depth quarterly client webinars. In addition to our regularly scheduled communications, of course, members of the 3Edge team are always available to assist advisors to mix and match the 3Edge investment solutions as part of their multi-manager approach to managing client assets. And we are also developing a Cambridge Investment Research channel on our 3Edge website exclusively for advisors on the CIR platform. Advisors will be able to subscribe in order to receive regular updates. We hope that you have found this brief video to be interesting and informative. We had a great deal of experience here at 3Edge and success working with advisors and their clients, and we would welcome an opportunity to speak with you to see if we could be of assistance in navigating what is becoming an ever more complex investment environment. You will find us on the Cambridge CAP platform under the heading of Active Opportunistic Strategists. We look forward to an opportunity to work with you, and thanks for listening.